What's going on, everyone? It's Sean Mitchell, Denver real estate agent with Co-Listings, and this is your August 2019 real estate market update to catch you up to speed on everything that's happened in the last 30 days or so since my last market update video. What are we going to be talking about in this one? Well, we're going to cover a few things. First, we're going to cover median days on market. We'll also cover single family months of housing inventory, as well as new listings, number of new listings, median sale price, mortgage rates for 10-year and 12-month, as well as the Denver area unemployment rate. Let's start with median days on market. We're sitting at 10 days, and that's a 25% increase month over month, as well as year over year. What does that mean to the average person? Well, it's taking 25% longer to sell your house this year than it was last year. 10 days is still phenomenal when it comes to how long it's taking to sell your house, median-wise. Of course, average is a little bit higher than that. And overall, just to provide some anecdotal insight, as I put houses on the market and help buyers buy houses in different parts of Denver, I am seeing a super red-hot market in central Denver. You probably have seen this. Houses will go on the market, and within a couple of days, they will go off. However, when we're looking at cities outside of that 470 ring, it seems like things are taking just a little bit longer to sell. I've got a listing that I thought was priced extremely well, under $500,000. We started off at $440,000, and it's now been over 30 days that it's been on the market. We've dropped the price a couple of times. Now it's listed at $430,000, which still I think is phenomenal for what you get for the money. But it is taking a little bit longer, and it seems to be that when I talk with other professionals in the industry, that they're seeing the same thing in some of these suburbs. Months of housing inventory for single family homes, 2 months, that's an uptick year over year, no change month over month. All things considered, 2 months is still extremely low inventory. How does that impact you as a buyer and a seller? Well, as a seller, it means that you've got less competition and more likely that you're going to sell for at or above asking price. If you're a buyer, that means that you've got limited houses to pick from, which can make it challenging, especially if you're a very particular person that knows exactly what you want. The months of housing inventory is something that I am keeping a very close eye on. I am sort of waiting for that months of housing inventory to tick up from 2 months to 3 months. It just seems like when I look at some of this other data that it is inevitable sometime this year. Again, 2 months, 3 months, still fantastic, still a very great market, but it just seems like it's not as red hot of a market as it used to be. Number of new listings, 3,898. That's a 13.44% drop month over month, and just a slight uptick year over year. When we look at the chart here, we did hit a very, very encouraging peak in around June, and where we had the most listings on the market that we've seen in about 5 years, which was very, very encouraging. I thought that that was sort of maybe an indication that things were starting to sort of pick up, but it does appear that that was the peak of the market for 2019, and now we're on a steady decline into the winter months. Median sale price is sitting at $460,000. That's a 0.22% drop month over month, and a 3.37% increase year over year. So this nearly 3.5% increase year over year definitely is positive, but it's nowhere near the year over year growth that we saw in previous years. And at a certain point, it was double-digit growth year over year. That increase is shrinking, it seems like, as we move forward. And that's one of the indications that tells me that we're not in as much of a hot market. Again, I have to preface this because sometimes people could run with one little statement. It's still a very, very good market, both for buyers and sellers. Mortgage rates for 30-year is sitting at 3.75, your 15-year 3.2, and your 5/1 adjustable is sitting at 3.46. To me, these interest rates are very, very great for buyers. They're at the lowest that they've been in like 8 to 9 months. So I'm very encouraged about that, and that definitely is making my buyers that I'm working with very happy as well. Unemployment rate for the Denver area is sitting at 2.9%. That is a 20% increase month over month and a 0% change year over year. I'm very encouraged by the unemployment rate here in the Denver area. As I say over and over and over, if you want to buy a house, you probably have to have a job. And job opportunities in the Denver area look to be pretty abundant and plentiful, especially when you look at the national U.S. market as a whole. Denver is in a very good position, and even if we see either an economic slowdown or a real estate market slowdown, having that low unemployment rate makes a huge difference. Plus, I think that Denver is positioned to be one of those next cities to see some of that really, really great growth. Lots of people moving here, as we have in the past months and years. And I think that Denver just offers a phenomenal quality of life, with the mountains literally an hour, 2 hours away, skiing, hiking, and all of those wonderful lifestyles that we all enjoy who live here in Denver in the Colorado area. So that wraps up this 2019 August real estate market update. If I missed something or you had a question that I did not address, please put it in the comments down below, or feel free and reach out to me with the contact information at the end of this video. Thanks so much for watching, and I'll see everyone on the next one.